I'm really pleased that I'm here first, because then I can hopefully enjoy the rest of the day. Because woke up about 4 o'clock this morning and I thought, I really must remember to say this. And I thought, well, I went through it about 10 times in my head. I thought, by the time I wake up at 7 or whatever, I would have forgotten it. So I had to get up, get my piece of paper and write it all down. So hopefully it will all be understandable. And what we have got is we've got a team of guys here with us today up on our stand, which I think is M31 and 33. So, and they'll be around later on. So if there are questions that you have, please don't shout out, because I might not know the answer. And then meet with them and come and have a chat with them later on. We're around all day. So welcome to the Master Investor Show. As I've just been introduced, my background is financial services, about 30 years in financial services. I've been out of it a few years now. I do sort of non-exec director work. I work with a number of different companies, and but the main area is with Solomon Global. So hopefully my background gives us an overview as to what we should be doing. I'll explain a bit more about Solomon Global as we go through the slides, but effectively as a business we sell gold and silver to the general public. We have a team of guys and girls that speak to people on the phone and then and make recommendations from that. Obviously in the financial services industry, I used to, you advise on all different areas of wealth management. The financial services industry didn't really sort of recommend gold very much. It wasn't an area that we got involved in. Bonds and pensions and all that sort of stuff, unit trust. But I've always been aware of gold as a really interesting, secure asset. And although, as I say, we haven't recommended much in the financial services world, as soon as I got an opportunity to work with Solomon Global, I was really keen to do it. I mean, it's a real shame that in financial services I wasn't looking at earlier, because I looked up, and back in 1985, which is when I joined or started in the financial services industry, the price of an ounce of gold, I looked, was $327. So if I just had a few pounds that I could have invested then, bearing in mind that it's over $3,000 now, an ounce you would have thought would have been a very good investment. Right. Okay. So I'm going to sort of chat through. I won't point. It's a typical. I won't point out the different points, but hopefully you'll sort of understand what I'm talking about. So, Solomon Global, wealth of experience. We have a team of advisors that a lot of them have been involved in the gold industry for a long time. We give them regular training, which is really more updates on what's happening in the gold market, what we should be looking at, what we shouldn't. We work a lot with the Royal Mint, we work solely with the Royal Mint. So what we try and promote in the people that, when we're talking to clients, is a sort of honest, supportive approach to customers. And although we're not obviously a regulated setup, that's what I try and push, is this idea of putting customers first and not giving advice, obviously, because we're not allowed to do that, but actually thinking about what the customer really wants instead of just selling them a product. So my background you've sort of heard. So although I'm involved in the bigger picture stuff, I don't actually get on the phones talking to customers, although I really probably would quite enjoy that, because that's what I've done for 30 years. Steering the ship is myself, but also my fellow director, Richard Farr, who's sitting over there. Now, Richard probably won't thank me in saying this, but he has decades of experience advising financial services firms and regulatory bodies. These include the UK Pension Regulator, Pension Protection Fund, and what we believe is he's given us a comprehensive understanding of the importance of long-term financial planning and investment in stable assets. Now, obviously, I've just read that out, which Richard gave to me earlier to make sure that I said the right things about him. But it does mean that we think holistically about how we are selling. So we want to be a bit more than just selling gold coins or bars or silver coins, which is the bespoke service that we try to sort of look for is looking at, right, what is it that this customer really wants? Why are they interested in gold? What are they trying to achieve from buying a coin or whatever it is? And obviously then looking at how much they want to spend. Now, as we're not, I said to somebody the other day, you should ask these questions. Why don't you ask them this and you get a bit more understanding of where they are? And then I was put in my place when they said, well, we're not regulated. So I forgot that obviously in the regulated environment that I used to work in, I could ask anything, and I was regulated by the FCA, so that they like that. So we try and get as much as we can, but we can't ask everything. But once we've got as much as we can, we will give a recommendation to the customer based on what we think is best for them. And we do that over a period of time. So it's not just all up front, it's not a one-off. What the guys tend to do is they're looking to provide an ongoing service. So obviously we want customers to come back to us again and again. Unrivaled access to investment grade physical gold. Well, we sort of obviously we do an awful lot with the Royal Mint. So because we do that, we can really get what we require. Some of it takes, or what the customer require. Some of it takes a long time, but we can do it if we need to. We tend to sell more coins, gold coins, than anything else, to be honest. We can sell bars, but obviously we get their gold coins from the Royal Mint, and because gold coins are considered legal tender and they have no tax liability on purchase or sale. So for most customers, that is probably the best route that they want to go down. If a customer is looking to buy and hold a coin for 4-5 years, we would definitely be suggesting that they look at graded, and we tend to look at graded limited edition coins of the highest quality, and I'll explain why that is. There's a premium on graded coins. You can buy graded, you can buy loose coins. But if it's a long term that you're looking for, it gives the right clients that want to hold on to their investment a better opportunity of returning better returns other than just the price of gold. And the reason for that is that there's investors and collectors that are interested in limited edition gold coins in premium condition. And grading just simply means that we send them off to a specialist company that grades them for us. They're protected. They're not touched by human hands. And depending on how good the print is from the Royal Mint, will depend what grade they're put in. So typically there's MS 60 to 70, 70 being top grade, 60 being the ones that would be the sort of minimum grade that we would look at. And if they're not at that level, then we sell them as loose gold coins. And I think there's quite a few of the guys here today, so I'm hoping they're nodding and not going, no, that's not what we do. So competitive rates, simply because of the amount that we buy and we trade in, we are able to sort of negotiate competitive rates, and we're constantly looking for ways to bring the price down. It's not always easy, but we do try and do that. The last one is an interesting one, always happy to buy back. The guys will say to customers, we are keen to buy gold back. Now, we have to be very careful with this, only because obviously there's a price to us buying back, and then we have to pay for them. It's all the cost of doing that, and then we have to sell them again, which is fine with loose coins, but with graded coins, there is sometimes an issue. That's why we say, because there's a premium, you need to hold graded coins for a period. Sometimes we do have customers that say they're going to keep the coins for 5 years, 10 years, and we have in some circumstances had people come back after 4 months and then say, can you buy these back from us? And of course, they're never going to get back within a 4-month period the cost that they've paid for them. So that's we try and make that everybody up front should know that sort of thing. So this is part of understanding what a customer wants and then try and recommending it properly. So anybody buying graded coins needs to hold on to them for as long as they possibly can, but they do represent a reasonable return over and above this is certainly what we found, over and above the pure price of gold. So FIFO, we're very pleased, very proud actually, of our FIFO rating. Everyone in the team works hard to try and keep it at that level. Obviously that's not always possible, because you're never, as you know, you're never going to satisfy everybody all of the time. So customers sometimes are, if there's something they're not happy about, we will go out of our way to try and make sure that we sort out any issues they might have to the satisfaction of the customer. I mean, in this sort of business, reputation, recommendation is really keen, and we don't want to get a reputation for having unhappy customers. This bit, I suppose, relates more to Patrick's introduction as to what I'm talking about. So I'm going to sort of just read through these bits, and again with this, if you really wanted to know in more depth, then do pick at the end of the presentation. There's going to be a few guys here, so you'll know who they are, and as I say, they're up at the stand as well. So gold is a reliable safe haven asset. During financial crises, geopolitical tensions and economic downturns, as it tends to retain or increase in value when other assets decline. Investors tend to flock to gold for stability and security when uncertainty shapes global markets. I mean, this is very true today, isn't it? I mean, the gold price over the last year, 18 months, has done extremely well, and we believe it's going to continue in that for a while. I'll show you some charts later on, just to sort of represent that. Hedge against inflation. Well, gold acts as a natural hedge against inflation, maintaining purchasing power when fiat currencies lose value due to rising prices. As inflation erodes the value of money, gold prices typically rise, preserving wealth over time, and that is really true. So these are not sort of words we're just picking out. This actually is how things work in this industry. I mean, portfolio diversification. When we're talking to customers, it's difficult because we don't want to be. We have to steer away from advice. So it's very important that we don't do that. But all portfolios benefit from diversification, and adding gold to an investment portfolio enhances diversification by reducing overall risk. Unlike stocks and bonds, gold has a low correlation with traditional financial assets, so it helps stabilize portfolios during market volatility. And that's a great place to be, where you've got a safe asset which is low risk, but actually works really well in stabilizing your portfolio. Global demand, especially at the moment, gold's value is driven by strong international demand, with central banks, investors and industries consistently purchasing it as a store of wealth. And I think now there are a lot of countries, there's a lot of areas where gold is being purchased again. I mean, you probably heard in America, they're actually looking at how much gold they've actually got still in their bank. So yeah, I think that all the time it's driving that. The price is going to do what it's done at the moment. This sustained global interest ensures liquidity and long-term stability, obviously, reinforcing its role as a secure asset. What I'm going to do is just show through a few slides. Don't worry, I'm not going to talk it through. So this is the 10-year in pounds price increase or sort of gold. Now that represents 198% growth over a 10-year period, and you really can't get, well, I as a financial advisor, ex-financial advisor, to get my head around that a 19.8% return each year. That would be phenomenal in your pension or in your safe, secure asset put structure. 1 year golf is just shy of 33%. Now we all know that is it's an anomaly. That's not going to carry on forever, but that's why I think the 10-year chart is really important, because even though the last 2 years have gone really well, it's the last 10 years which is important. If you are doing an investment, that's great, but hopefully the wars will get sorted out and all the instability will reduce, and then all that massive growth will come back. But 19.8% is a good place to have your money. And of course, easy slide to show. Power of your pound has come down over. Power of your pound has come down over time. So it just sort of represents that gold as an investment is a good place to be. Right, so what I was going to just say was just to recap on those bits. People buy gold for many different reasons. It's good in a crisis. It's safe and secure, retains value over the years. It's comparatively easy to buy, and that's one of the things that we sort of think is that we can help customers get into the market. It's tax efficient, especially if you're buying UK coins. And remember that we get all of our coins, new coins, from the Royal Mint, and it's comparatively easy to sell, so it's liquid. So all of those things allow you to get to put toe into the market at any time, really. I mean, you'd expect, wouldn't you, that we'd have an offer. So what we're saying is that if any of you are interested in purchasing gold, if you purchase a graded gold coins from us, then we'll give a Silver Britannia as part of that investment. You don't have to buy today, obviously. You can do that as long as you've been here. So the guys are going to be, I think they're going to be, there's some brochures here if anybody would want to look at them. The guys are around, and that we're up, as I say, I think it's M31, M32. Please come up and have a chat with the guys if you want to ask some more questions. And I just want to thank you very much for listening to me. Thank you.